David, thanks for joining Business Spectator. It's great to have you with us.
Thank you, Alan.
Now, David, leaving aside the specifics of the Russian gas deal with China and also the potential for LNG exports out of America, isn't it the case that you are in a declining price environment for LNG, for gas in general?
No, I'd say actually quite the reverse, Alan. And I'll give you a couple of really high-level reasons, and one that I've been talking about for years. The first is, as we all know, the nations that are typically buyers of LNG in our region are energy short. They need multiple sources of supply. And just talking about Japan in particular, they want to buy LNG from as many suppliers as they possibly can. So that's one reason why I believe in the long term LNG is going to be very important. It's because of that multiple sources of supply and ultimately requiring secure supply. The second reason, and it's becoming, I'd say, increasingly important, is air quality. Just a straightforward business. If you want to live in Beijing, or if you live in Hong Kong, or even in Seoul right now, air quality is becoming an increasing issue, and particularly gas that can come from LNG. In other words, its multiple sources can address the air quality issue. So I'm actually more confident today in the LNG market and therefore the price of LNG than I've probably been over the last 15 years that I've been in this business.
But David, just as an old-fashioned sort of viewer of the markets, we've suddenly seen the Russians come in and supply China with gas. I know it doesn't start until 2018, but with gas that about equals the total Australian output of LNG. And they're saying we can probably double it later on. And they've cut the price to ribbons. They're substantially below the Australian price, even substantially below the European price. Now, when somebody comes onto the market with an enormous quantity of material and cuts the price, you cannot but otherwise be affected by that. You just can't. I accept all the things you're saying about the demand, that's right, and there's Japan, there are other places, but this is the most enormous contract we've ever seen, and they've cut the price. A brilliant deal by the Chinese.
Well, let's just talk about the price, and obviously the price hasn't been fully disclosed, but my understanding from analysts is that the price to the border with China is $9. So that means that the price into Beijing is somewhere north of $10, $11. Today, if I sold my LNG to Beijing, I'd be bringing it to Beijing at about $14. So yes, today there is a differential. But as I say, it's about multiple sources of supply. Pipeline gas is going to be important from China. Absolutely. From Russia into China. Absolutely it is. But you're not going to be dependent upon or entirely dependent upon gas coming from Russia. The Europeans know what happens if you put yourself in that space. Chinese will not do that. They will also look for multiple sources of supply. And so I don't believe at the end of the day that the Russian pipeline deal is going to shut us out, as some people might have suggested, from long-term LNG deals into China. The other thing you've just got to think about, in total terms, that gas pipeline will supply 1% of the total energy demands of China. In 2030, it's likely to supply about 6% of China's gas needs. So, it is important, but it's not an absolute game changer for us. It's been in the wash for a long time. We've known about it for a number of years, so it's been factored into the equations. And even with that factored in, China still needs about 100 million tons of LNG if you look forward to 2025 to 2030. So I still believe China is going to be in the market buying LNG for the next decade and the decades beyond.
David, the Macquarie people are saying that that Russian contract equals about 20-25% of the Chinese gas demand, nothing like 6%. I'm not in a position to say whether you're right or they're right.
In 2020, it's 10% of the demand, assuming they can supply. 2030, it's 6% of the demand.
That's because what you've done is to escalate the whole.
Absolutely, of course I have. Yeah, Chinese gas demand is going to grow. As we all know, gas is the fastest growing of the energy sources, and it's growing at about 3% per annum. So absolutely, you've got to take that into account. And this is why I'm confident, because if you look forward at projections of energy demand, they are very significant. And then if you look forward to projections for gas, they're even more significant.
You think the Chinese are going to pay the Australian price for future contracts when they can get it from Russia at a fraction of that price?
Well, it's not a fraction. I don't think it's $10.50 into Beijing. Obviously, you want to go into Shanghai, it's a considerably higher price than $10.50. So I don't believe it is a fraction. I think if you do the maths today, there is a slight differential, but it's not a massive differential as perhaps you were suggesting earlier. It's a matter of a couple of dollars per BTU, and that's not a massive difference when you consider some of the other factors that are critically important in supplying energy to nations such as China or into Japan.
David, with the Russian deal, you've got a contract price. We know that the Japanese are trying to actively and aggressively shift their suppliers over to a Henry Hub-based price. At a practical level, does it actually make much difference if we move away from oil-linked pricing? What would it do to you?
Well, for us, for my company, Santos, it would make very little difference. We've just started up Papua New Guinea. Our operator Exxon's done a wonderful job there. They started up, they're delivering cargoes. Those are at oil index prices for the next 20 years. Our Gladstone project also, oil index prices the next 20 years. Our Darwin contract, exactly the same oil index prices. So for us in the near term, that's the next 20 years, it doesn't make an enormous amount of difference. But frankly speaking, Henry Hub is very likely to be something like 15% or Henry Hub pricing, about 15% of global LNG demand. Japanese customers, as will other customers, they will seek to have, say, 15% of their LNG exposed to Henry Hub pricing. But they're not going to go for very percentages much higher than that. Because again, they want to make sure they've got multiple sources of supply and that those sources can deliver them with real confidence into their market. If you're in Tokyo, the key thing you're rewarded for is obviously keeping the lights on. And that is the critical thing, and therefore you want multiple sources of supply, and Australia is in a great position to be one of those sources for today and for a long time in the future.
If those new sources of supply don't affect your existing projects, could they affect future projects, given what's happened to development costs?
Well, I think we're already seeing, if we're talking about Henry Hub in particular, we're already seeing that a lot of companies in Japan and also, of course, KOGAS in Korea, that they are maxing out on their exposure that they want to Henry Hub already. So they're already at about the 15% level. So I think you'll see them over the next few years come back into the market for reasonably priced LNG. And I believe firmly that Australia is actually in a good position to supply that, especially from brownfield expansions. Now we have a large amount of infrastructure on the ground. Expanding that in the brownfield sense is, of course, a far more economic proposition than doing the original greenfield.
But just to be clear, David, are you saying that the Russian deal with China has not resulted in you making any changes to your modelling on the Gladstone project?
Absolutely none. The Russian deal has been telegraphed, signposted for years and years. So it's been in people's models for a very long time. It's now obviously been consummated. It's still for delivery in 2018 and beyond, and maybe even 2020 before it starts to get up. It'll ramp up over a number of years, and it's not cheap. You know, it is $9 to the border, I understand it. That's at least $10.50 into Beijing. So this isn't inexpensive gas. It's an important deal, but it will not derail the global LNG supply, which is about 450 million tonnes by 2025.
David, talking about Queensland, how much of the, as it now looks, how much of the Curtis Island 3 LNG plant supply sourcing will come from coal gas in Queensland, and how much of it will come from the Cooper, in rough percentages?
For ourselves, we're going to supply right now contracted about 140 terajoules a day from the Cooper, which is slightly less than 10% of our total demand for gas into our plant. So that's from our project. The other two projects will, broadly speaking, be meeting their own supplies from coal seam gas.
So it's the Cooper's providing only 10% of yours, but nobody else's?
Right now, nobody else's, right now.
Do you think it's possible later that the Cooper would have to supplement the others?
I wouldn't like to speculate on that. I think we really have to ask the others. But I think what's important is that we've now exposed the Cooper to the LNG plant. That gives us the opportunity to really invest in the Cooper. What you're seeing us is investing a very large sum of money, talking about $1 billion to $1.5 billion, upgrading the systems in the Cooper, adding more equipment in the field, drilling more wells. We've got 6 rigs operating there now. so that we can really unlock the Cooper wells. And we're also, of course, in parallel with this, looking at the shale also that's in the Cooper Basin. And that's a very exciting aspect of the sort of new opportunity that's open to Santos to unlock new sources of supply, which can then go either to the LNG plant, our Gladstone LNG plant in the long term, or can go into the domestic market, which we believe firmly in 2017 and beyond, is going to need more gas supply.
Is there enough gas in the Cooper? Let's assume that the coal gas exercises nearer to Sydney don't happen, and that's just an assumption, it may not be right. But let's assume that for the minute. Can Cooper supply Sydney?
I think Cooper can certainly help Sydney market. In order for us to do that, we'll be looking to unlock our shale resources so we can point them to the Sydney market as well. So I think that's what we're doing as a company is we're doing everything we can that's reasonable and as far as a business case is available to us to unlock our sources of supply. And that's the Narrabri project in New South Wales obviously is one for New South Wales, but also the shale in the Cooper, which I think has got prospects, but it's very early days yet. We're just fracking our big horizontal well right now. We'll see what the results are over the coming months from that. But you need to drill at least 10 to 15 wells to really decide whether you've got something truly viable. Indication's good so far, but we've got quite a long way to go before we can really be certain.
But if Narrabri doesn't go ahead, is it what you're really saying is that there's a lot of drilling before we can actually supply Sydney without Narrabri?
Yeah, without Narrabri, I've been saying very clearly to New South Wales, it's going to be hard. You're potentially running the risk of running short of gas in 2017 and 18 and beyond. We need to get the Narrabri project up. That's why we invested in it as a company. We believe the resource is in the ground. It's a good quality resource. We need to move it forward, and we believe we can and have the ability to do that and to do that in a sustainable and acceptable manner.
David, today IPART announced that New South Wales regulated gas prices are going to rise by almost 18% from next month. Do you think that the reality of these surging prices is going to weaken some of that really bitter opposition you've faced at Narrabri?
No, I think the opposition is more fundamental than that, and it's more based on a fundamental set of beliefs that we don't want hydrocarbons to progress in the Australian economy. They want to oppose all hydrocarbon development, whether that be oil, gas, or coal, so I think that's a very fundamental opposition there. But I think the IPART decision, which has come out today, is just an indication of why, just in basic economic terms, we've been saying for a long time that we're keen to get on with this project because we want to get the gas out of the ground, we want to get it into the pipes so that we can supply New South Wales. And that's been something we've been saying for, 3 to 4 years now. It's extremely important we do it and extremely important we get on with it.
Dave, do you think that the political situation in Australia, and in particular in New South Wales and more recently Victoria, means that the only fracking that's going to be possible in Australia is in the Cooper Basin?
Well, no, I don't agree with that. I think at the end of the day, while we can't frack in Victoria today, we're not looking to do so. In New South Wales, we don't require to do so, obviously, for the development of the Narrabri project. Cooper Basin, we've done it for the last 40 years. We'll be doing it for the next 40 years. And in Queensland, we do a small amount of fracking. Maybe 10-15% of our wells are fracked right now. Fracking is not an unsafe process. It's a process that's been used for a very long time throughout the industry globally. And what we have to do is we have to tell the story around what we're actually doing when you talk about fracking. There's not a big explosion underground or anything like that. We're pumping water at pressure with sand in the water to open up the fractures. We take the water pressure off. The fractures close around the sand grains. And the fractures that we're opening up are only 8 to 10 sand grains wide, so they're very small, and we try and get them to run away from the wellbore for 10, 20, 30 metres if we can.
Well, I wasn't getting involved.
It's not a process that people should be at all concerned about, provided it's done well and provided the wells have good well integrity, and it's a perfectly safe and reasonable process.
Oh, and I'm sure that's what you say, and that's probably right. I'm not getting into that. It's really a question. The issue in Australia is that there's a lot of opposition to it.
Well, there is some opposition, but I think as we explain its importance and people start to understand the process, then I find in my conversations that opposition falls away. And where fracking is required, I think we'll be able to explain it and make the case, provided we do that well.
You've got a very big opponent in Alan Jones in Sydney. I think in that particular battle, you are against one of the toughest campaigners there is, and I don't know that there's any corporation that could really succeed against that.
Well, time will tell. I think it's extremely important that we unlock the Narrabri gas reserves, and that's what we're seeking to do. We'll do it applying really high-quality technology. In that case, what we do is we drill straws. We basically drill 3 straws on top of each other, horizontal wells. Then we intersect the nose of those wells. That's how we develop the coal seam gas in the Narrabri project, and we'll continue to do so. So I believe ultimately that we need to be successful. It's important for New South Wales. It's important for Santos and my shareholders. But above all, it's important, as I say, for Eastern Australia that we do develop that. What could be a very large resource.
Do you think the price of gas on the eastern coast of Australia is going to become very close to the export price?
I wouldn't like to speculate on where it'll go, but if you do a net back to Wallumbilla, the price in Eastern Australia is circa about $8 right now. I think if we can increase the supply, then we've got a reasonable chance of having a North American experience take place, which would be fantastic. Who would have predicted that what's happened in North America would happen 10 years ago? I think virtually no one. What they did, they went up to circa $12 per unit for gas, and then people invested. There were 1,800 rigs drilling, and then the price came all the way down. It could happen here in Australia. It will probably be on a longer time frame, but certainly it's my ambition to unlock the gas resources of this country and bring them to market both domestically and through our expanding LNG system that we have at Gladstone. And that's what propels Santos into its new place. We're going from a domestic gas company into an Asian player led by LNG, and that is the really exciting proposition for the company I'm fortunate enough to lead right now.
David, with PNG LNG now producing cash, Gladstone scheduled to start up next year, you're going to have a lot of cash to play with. I assume shareholders are going to want their own share of it, but are you already thinking about your next big project, and is it likely to be the Browse Basin?
Well, it's a good question. You're quite right. In 2016, our cash flow is potentially will double, all other things being equal, as we bring these 2 massive projects on, and that will give us the opportunity to balance rewards to shareholders with growth. I think when it comes to the growth discussion, it's just indicative of what we're doing today is an indication of where we think the growth may be in the future. Today, we're drilling a very big well in the Browse Basin called the Lassiter well. It's a very big exploration well close to our Crown discovery. Very exciting. Well there. In the Northern Territory, we're just about to spud. I think it's this Thursday. We're going to spud a well or start drilling a well in the Northern Territory, a deep shale well. That's extremely exciting. And also in the Northern Territory, we're drilling a 3-well program in Caldita Barossa. So you can see that's where we're putting our future development or exploration dollars and appraisal dollars, and that gives you some indication of the type of areas where we're looking to develop.
In terms of that northern gas, the offshore northern gas, do you see the most probable course a kind of a step out from Darwin LNG, or are you looking at, say, floating LNG technologies?
I think it's a combination of both. Clearly, others have invested in floating LNG technology. We have one project, Bonaparte LNG, that is looking at FLNG as floating technology as well. But equally in the Northern Territory, we're owners of the Darwin plant, and there's opportunities there for expansion of that plant, which is operated by Conoco. So clearly there are opportunities for either floating LNG or brownfield expansions of existing facilities. And potentially there is already a pipe from Browse that's being constructed to come all the way into Darwin. So you can see there's a lot of options here available to us and to our partners to bring gas either through a floating system or bring it on shore and do a brownfield project. And we'll run both options in parallel as we go forward. The exciting thing is that we're still finding gas in large quantities off Northern Territory and Western Australia. And that's very good for Australia.
David, what the analysts tell us is that the cost of producing new fields in Australia is just way out of proportion to the rest of the world. And Woodside are saying similar things to that. Are these projects that you're looking at now, exciting as they might be, really dependent on some very big things happening in gas so that high-cost construction can be covered? And that's our problem.
Well, no, I think you're overplaying the hand there. I think if you're doing a brownfield expansion of Darwin, it's very feasible for Australian expansions to be highly competitive. If we're looking at the Gladstone projects, if you look on a dollar per tonne basis of the tonnage that we're all developing, they're actually not bad on a global sense. And what we're seeing now, now that this massive wave of investment, $180 billion in industry we've invested, looking out the back of the wagon the last 3 years, 2 years to go for this investment. As that investment starts to come off, you're going to see prices start to fall here in Australia for developments. Number of factors involved in that, not necessarily labour costs, but also the fact that we've just learned how to be more efficient in delivering these massive projects. We've learned a lot on this road. Australian contractors have learned a lot. The next time we do it, we're going to do it better. And I believe we're seeing already, when we're going for the next tranches of work in our own Gladstone project, we're seeing 20 to 30% reductions for a very similar scope of work. So I'm actually not a pessimist on this at all. I believe that going forward, provided we grasp the opportunities, we have good reason to be cheerful and that we will get the costs down and we will remain competitive.
David, can I ask you, what's your view of the long-term future of energy, and in particular, do you see gas? A lot of people see gas as a transitional form of energy towards renewable forms eventually, particularly in the context of the global moves towards some sort of emissions trading to deal with climate change.
Yeah, I think there are obviously 5 levers in this whole energy game. There's how much coal, how much nuclear, how much gas, how much renewables, and then how much you invest in energy efficiency measures. Those are the 5 things that you have to decide. And I think of those, obviously I'm very closely involved in the gas and the oil business. Gas is unique in that it's relatively low carbon footprint, about half of that of coal. It doesn't use very much water when you're in the power generation business. And above all, you can switch them on quickly. You can switch gas plants on very fast. And therefore, they're a very good partner to renewables. Because you can bring a gas plant on quickly, it's very good when basically the wind stops blowing or the sun stops shining. So I think they sit extremely well together. The other thing that's very good about gas is you can use it as a transport fuel. I think what you'll see increasingly is gas will come into the transport mix either for trains or big trucks, and that'll further reduce the level of emissions in both our economies but other developed economies around the world. And I for one would believe that that's a good thing if we can get our carbon footprint down, and gas will play an important role in doing that in the medium to long term.
In that context, what's your position on the coalition government's policies on these things, particularly with the declarations in Canada this week about that they're all against emissions trading, and then at the same time the United States seems to be moving towards that?
Well, I support any policy that it really sensibly allows us to conduct business, to do it competitively, while seeking to reduce the level of carbon that's going into the atmosphere. So I support policies which allow us to stay competitive here in Australia, but equally continue to work on bringing the level of carbon down globally. So anything we do sensibly in that area, I think should be encouraged and should be supported. And gas has an important role to play in that. If you look at North Americans' emissions, it is quite extraordinary that since they started producing large quantities of gas, that country has done more to reduce global emissions than any other country in the world. And it's done it through the substitution of gas into the generation mix. And largely coal's been squeezed out.
We'll leave it there. Thanks very much, David.
Thanks, David.
Thank you very much, everyone. Thank you.